Have you ever put money in the bank and just felt good about it? Like it's safe, it's secure, maybe it's even growing a little? Well, what if the whole system is designed to work in a way you never imagined? Today, we're jumping into an explainer that pulls out 14 key banking secrets from our source material. These are the hidden rules of the game, the ones that quietly shape your financial life every single day.
This quote from our source, it just gets right to the point, doesn't it? That money you deposited, it's not tucked away in some vault with your name on it. The second it lands in your account, it becomes a tool for the bank. They use it for loans, for investments, for making profits that, let's be honest, you're probably not getting a piece of. So let's see how this incredible money machine really works.
Okay, first things first. Let's get right to the foundation of it all. How do banks actually make money from your money? It's a system that's, both ridiculously simple and, for most of us, totally misunderstood.
We're all taught that a savings account is how you grow your money, but our source points to a pretty harsh reality. Let's say your bank gives you, 0.5% interest? Sounds okay, but what if inflation is at 3%? That means the actual buying power of your money is going down. For every $5 you earn on $1,000, you're actually losing $30 in real-world value. Do the math, you're literally paying the bank to hold your money.
And wow, this slide just lays it all out, doesn't it? On one side, there's you, with your $1,000, earning a return that doesn't even keep up with inflation. On the other side, the bank takes that exact same $1,000 and loans it to someone else, charging a massive 20% on a credit card. It's a classic arbitrage play. They profit from the huge gap between those two rates. And your savings? That's the fuel for the whole engine.
Now this is maybe the biggest secret of them all, according to the source. We think only governments can print money, right? But the truth is, commercial banks legally create new money every single day. And they do it through a system called fractional reserve banking.
Okay, so follow me here. You deposit $1,000. Great. Your account balance says $1,000. But the bank only has to keep a tiny piece of that, let's say 10% or $100. It then loans out the other $900. And here's the magic trick. Your account still shows $1,000, but now the borrower has $900 in their account. Poof! The money in the system just jumped from $1,000 to $1,900. The bank just created money and, you guessed it, will earn interest on it.
This whole business of creating money through loans, it leads us right to our next big topic, debt. Now, for most people, debt is a four-letter word. It's stress. It's a trap. But for a select few, it's one of the most powerful wealth-building tools on the planet. The difference is all about knowing the rules.
So the source defines consumer debt not as a service, but as a product that banks sell really, really well. Think about it. Credit cards, car loans, they're all designed to lock you into years of high interest payments for things that are pretty much guaranteed to be worth less over time.
Here's a super simple example. You buy a $500 TV on a credit card. If you just make those little minimum payments every month, you could easily end up paying over $700 for it. That extra $200, that's just pure profit for the bank, and it's built on keeping you stuck in that debt cycle.
And it scales up in a way that is just staggering. We all think of a mortgage as good debt, right? But our source shows this really shocking calculation. Over a 30-year loan, you might pay nearly double the original price of your house. Think about that. Half of every payment you make for 30 years, hundreds of thousands of dollars, could go straight to the bank as pure interest.
So if debt is such a trap for most of us, how on earth is it a tool for the wealthy? Well, according to the source, it's because they're basically playing an entirely different game, using the exact same system to their massive advantage. I mean, just look at this chart. It really shows the massive difference in how much it costs to borrow money. An average person might fight to get a mortgage at 4%. A billionaire, as the source points out, can get a loan for around 1%. Why? The banks call it risk management. But the result is always the same. The person who actually needs the money pays the most, while the wealthy get to borrow for almost nothing.
And here is the real game changer. When most of us need cash, what do? We sell something, stock maybe, and then we pay taxes on the profit. But the wealthy have another move. They go to a bank, use their stocks or properties as collateral, and take out a huge low-interest loan. And because they never actually sold the asset, there's no sale, which means no tax. It's a perfectly legal way to get millions in cash, tax-free.
And the scale of this is just hard to wrap your head around. The experts cited in our source estimate that $8 trillion are hidden away in offshore tax havens, places like the Cayman Islands or Bermuda. This is wealth that's legally shielded from the tax systems where it was made, often with the help of the very banks we're talking about.
Okay, so this brings us to our final big idea. How does this whole complicated system stay afloat? According to the source, it's all built on two very specific things: a widespread lack of financial education and our blind trust in the system itself.
This quote from the source just says it all, really. A customer who doesn't understand compound interest on debt is, well, a much more profitable customer. A saver who doesn't know about investing is much more likely to just leave their money sitting right where the bank can make the most profit from it.
And the source argues this is no accident. Think about it. Is personal finance a required class in most schools? Nope. So millions of people become adults without really understanding credit or debt or investing. And as we all know, when you don't know the rules of the game, the house always wins.
But at the end of the day, all of it, the loans, the digital money, the entire global financial world, it's all balanced on one single, incredibly fragile idea: your belief that your money is actually there when you ask for it.
This right here is the system's greatest vulnerability. It's called a bank run. It's what happens when that trust evaporates and everybody tries to get their money out at the same time. But as we just saw, the bank has already loaned most of it out. The cash isn't there. The whole illusion only works as long as we all agree to believe in it.
So after hearing all this, what's the big takeaway? The source isn't telling you to go stuff your cash under a mattress. Far from it. The message here is really about empowerment. The first step to winning the game, or at least not losing it, is to understand the rules you're playing by, the loopholes, the tricks, and all the secrets.
And that brings us to our final question for you. Our source material makes a pretty strong case that the game is, in fact, rigged to favor the house. So now that you've seen some of the hidden rules, what are you going to do with that knowledge? What's your next move?